This is why property valuation in buying or selling is important. This video explains why. Welcome back to our KITO podcast. My name is Daniel Wanjao, a real estate consultant here at KITO. I'm here today to guide you about property valuation and its importance. What is property valuation? Property valuation is the process of estimating the value of a particular interest in property for a specific purpose and a specific point in time. Market value, on the other hand, is defined as the amount of which a property should exchange on the date of valuation between a willing buyer and a willing seller in an arm's length transaction after proper marketing, wherein the parties had each acted knowingly within the transaction. There are several methods that valuers use to determine the value of a property. Whichever method that is used is dependent on the type of property, availability of data, and purpose of valuation. For example, buying, selling, taxation, client requirements, or property characteristics. Here are three most used methods in Kenya. Number one, sales comparison method, also known as the market approach method. It involves comparing a subject property with other comparable properties that have undergone recent similar transactions in the same area. Adjustments are made to account for certain differences such as location, size, and features. Number two, capitalization method, often referred to as the income method in short. It is mostly used to value commercial and investment properties. It measures the ability of a property to generate and maintain a stream of income for the owner. The method is based on the net return from investment that a buyer expects from the property. For income capitalization to be effective, it is required that the valuer has relevant information such as income and expenses of the property in terms of the tenants. In investment analysis, the value of a capital good is established and measured by calculating the present value as at a particular valuation date of the anticipated future benefit income for the owner of a specific period. 3. Cost method. This method aims to value a property based on the cost of constructing a similar one, while considering the land value less depreciation. It may be the cost of erecting an exact replica or the amount required to construct the entire property, like the utility and function considering current market prices for materials, equipment, and labor. The cost method is best applicable to new properties and those that are unique in nature. For example, churches or schools. Therefore, having few comparables in the market for reference. Importance of property valuation. Accurate property valuation matters to buyers, sellers, and investors because it is more than just a technical necessity. It's a practical tool. Valuations help avoid overpaying for a particular property and ensure fair price. In financial institutions, for instance, valuation is essential in ensuring that the money lent is not more than the actual property value. For developers and property sellers, realistic asking prices are essential in ensuring that potential buyers are not lost and see to it that there are no financial losses due to underpricing. Lastly, for an investor, valuation justifies whether a property is worth the capital investment based on income or future resale and helps to assess return on investment. Why is property valuation crucial? Number one, mortgage approvals. Valuation is crucial in determining the actual amount of money banks and mortgage lenders are willing to issue a property purchaser. This ensures that in case of failure to pay the bank, the money can be recovered without incurring any financial loss. Number two, insurance. Property owners, houses, warehouse, or landowners need a valuation to determine the amount of insurance cover needed to avoid and the insurance which might have severe consequences in future. Number three, taxation. For example, in Kenya, governments do valuations on all properties to determine that the property taxes and rates property owners are paying are fair. Apart from administrative purposes, property valuations is also used to compensation for compulsory acquisitions by the government, divorce settlements, calculating capital gain tax, estate planning and inheritance, as well as financial reports, audits, property management feasibility studies, rent review, mortgage refinancing, and determining the forced sale value. In conclusion, the nature of valuation, the Kenyan real estate market characterized by limited information, which is common in developing countries, that makes it difficult for buyers, sellers, or investors to make accurate property valuations. For that reason, it is imperative that one uses a professional valuer who have expertise, market knowledge, and access to reliable data that may be hard to obtain for the public. The impartial assessments will ensure you make informed decisions that will in turn maximize the value of your real estate investment. Kindly check below our contacts on the screen for further inquiries. Thank you.